Other high beta trades have led the market so far this year, but Matarin Capital's Nili Gilbert is making an argument for value. She is back with us live today. It's good to see you again.
It's great to be back.
So I like what you have for your thought here. One concern is that excessively speculative sentiment has been pushing the stock market up, which you say is not the healthiest kind of rise. Explain that.
At Matarin, we have a positive outlook for the stock market right now, but as you know, we always want to also pay attention to what kinds of stocks are leading the market up to assess the health of the rally. So we track something that are called factors, which are quantitative indicators that help us to classify or group different kinds of stocks. And what we've seen so far this year is that it's the high beta factors that are the top performing in the market.
Not necessarily new by any stretch of the imagination, right? I mean, those are the stocks that sort of have led for the last, decent period.
12 years.
Well, it's if you compare what we saw during the fourth quarter with what we've seen during the first quarter, that's quite a change. And in fact, if you look month to date, that you'll see that actually the low volatility is starting to come back. Over time, you'll find that the high beta factor actually tends to be the lowest performing factor that you can find. We like to track something called the S&P factor dashboard that looks at the performance of all of the S&P factor indices over time, with 15 years being the longest term period that they look. And high beta was literally the top performing index during Q1 19 and also the bottom performing index over a 15-year period.
The rally, though, has seemingly gotten more broad of late, right? The breadth of the market's better lately than you could say it was, maybe a couple of months ago.
Even during April alone, we're starting to see a turnaround in breadth.
Yeah.